Kriben, thanks so much for your time. So interesting report, or maybe not so surprising, the fact that the price of new cars is continuing to go down.
Yeah.
And that's because, I mean, we're living in really tough times. I mean, how many people can actually afford to buy a new car? Is that what is driving down the prices of new vehicles?
Look, that's a part of it. I think the manufacturers and the brands in the country are definitely strained to maintain decent pricing levels. That's why you see both on new and used vehicles, it's way below CPI, almost half of what CPI would be. And the reality is that although pricing is at probably the best level from a consumer perspective, the challenge is that consumers are still strained as well in terms of disposable income and affordability. And although the ticket price in a vehicle might be cheaper relative to what it would have been, the previous year, it all still comes down to what can a consumer afford to take on at that point in time.
I mean, the car market has been in a tough position for a really long time. I mean, I don't remember the last time I read for the year, domestically specifically, not talking about the exports, that things were getting a little bit better. What is the state of play as you see it for 2019?
Look, 2019, I think coming into the year is definitely challenging. If we look at total new vehicle sales, we were down 10%, that's according to the NAMSA reports. From a finance perspective, you can see there's a significant decline as well. So if we look at new vehicles for the first quarter, finance deals were down 10%. On used vehicles, also down around 8%, probably averaging around 8% on both new and used.
Is that a function of consumers being more prudent in not going or applying for finance, or a function of more rejections?
So I think in terms of the bank's take-up rate, it's probably remained fairly the same over the quarter. It's definitely a level of consumers not entering the market as quickly as they would have, and that's due to a number of factors. So definitely affordability plays into it, and there's a number of factors that's driving lower disposable income. So it could be higher fuel costs, electricity costs. We saw during the period of load shedding that would have hit consumers, definitely hit consumers and dealers alike. And that drives that. And then there's also the around affordability. Consumers will opt for longer finance periods just because they're watching their pocket every month. And that maybe takes a consumer anywhere between 12 to 24 months out of the buying cycle if they were to shorten the period as they would traditionally would. So that definitely plays a factor as well.
I mean, the price of oil, which ultimately, derives how much we pay for petrol here with the rand. It's the outlook for it. I mean, people are talking about Brent crude going to $80 a barrel as a result of, sanctions and factors at play there between the US and Iran, amongst one of the issues. Surely this can't be good for more people buying cars locally.
Yeah, the domestic market will be hit hard, right? So, I mean, fuel is something that you fill on a daily or weekly basis, and it's something that you have to have. So that definitely hits the consumer's pocket. I think generally, though, it's one input, and that's the challenge, is that if it is purely... Is it
not the most significant, though?
It's probably the most significant, but if you look at the total cost of ownership on a vehicle, and if you go back a few years versus now, so the fuel price definitely would be the most significant impact, but the VAT increase would have played a role as well. And generally, the perception might be that, if VAT increased by 1%, it might just translate into what you pay for the vehicle. Actually, it ripples through the entire cost of ownership of a vehicle, because you've got to think about what your insurance premium is. That's going to take a percentage increase, or would have taken a percentage increase. Any consumables you buy around a vehicle, whether it's tires or your service or maintenance stuff, that would also have incurred the 1% increase. The increase in interest rates would have played a factor and also been quite significant on the consumer's pocket. So that's where you see the number of consumers coming into the market or entering back into the market is definitely of lower volume.
I mean, the fact that our used car market is a lot more popular than the new car market is not something that's quite unique to South Africa. We've seen it in many other countries on the continent. I know in Kenya specifically, it's so popular that the government is looking at laws to essentially curb the number of imports coming into the country just to prop up the new car market for a specific price target. I'm interested in how the new vehicle manufacturers are staying abreast in these tough times. You speak to a number of them in surveying this index. What are they doing?
So we see during periods like this what manufacturers generally will do. One is definitely pricing, and you can see it's holding steady on new vehicle pricing, and certainly within a range that's acceptable, being below CPI. Of course, that's not enough. Further to that, the challenge around a consumer entering into the vehicle buying cycle is not just the fact around affordability of the next car that you're going to purchase, but it's also your ability to get out of your existing vehicle. So you'll often find manufacturers putting in place either incentives or trade-in incentives that will assist a consumer to get out of the vehicle that they're in and also enter into the new vehicle. And that, coupled with additional marketing incentives or discounts, actually assist consumers to get into the next vehicle.
All right. So in terms of the changes in pricing on the used and the new cars, are we looking locally? Are we also looking at the cars, which are many, that leave South Africa to other parts of the world?
No, so the report runs purely on vehicles within the South African market and all related to domestic sales. So it would be what was sold to an end consumer, and we track that over a period of time, and that's how we work out what the VPI would have been. But it's purely vehicles that left a dealership floor and was retailed out to an end consumer.
And are you able to tell us which manufacturers are doing better than others in these difficult times?
So I wouldn't state any manufacturer by name, but the top volume sellers do well because they play across a category of entry level, medium segment vehicles, and then high end. And in challenging times, especially newcomers into the car buying market, will start with entry level, and that's where some of the manufacturers would do better than others.
Yeah, I mean, even in that luxury space, we are seeing car manufacturers kind of adopt a different strategy. Audi now is launching, is it a double cap, I believe? That's the terminology, right?
Yeah.
So Audi is launching a double cap because, I mean, that's a part of the car market that is doing pretty well if you look at what the Hilux is doing and the Ranger, amongst others.
Yeah, so one of the other things that's coming out now is it's not a subscription-based service, but it's almost a guaranteed value on a vehicle. And that's how the luxury brands will stay afloat as well, is that they will offer you a guaranteed price on a vehicle that you buy today, but for a forecasted or future period. So as an example, they'll tell you today, but they'll guarantee you what you can return the vehicle for in 36 months. And that maintains and retains their customers within the buying cycle. And you'll see that in the luxury space and premium brand, more apparent there than entry level or the medium segment, as an example.
But that often when we talk about the resilience of each market, it's always that the luxury guys, in as much as they're also feeling a bit of pressure, they tend to be a lot more resilient because the fact that they cater to well-heeled consumers than the guys at the bottom end of the spectrum. Is that the case in the car market?
It is. I mean, you'll find that generally, and there's different segments of premium as well, right? So there's like your really top end and your very premium brands that will be imported, etc. And in those spaces, those consumers also have access to cash, as an example. So, a portion of the deal would not just be funded, a portion would be funded, and portion would be cash. There's options of access into using bonds or mortgages to subsidize some of the costs to purchase vehicles, etc. So it's definitely less sensitive, and they definitely stay ahead of the curve in that aspect.
All right, so the status quo remains for them in the car market. Kriben, thanks so much for your time. We're going to have to leave it there. That was Kriben Reddy, the head of auto at TransUnion Africa.